Welcome, Matthew. Thank you so much for coming. It's always a delight to have you, and I know you have such great wisdom to share about the investing world.
Right, thank you.
And obviously tonight we're really focused on the crypto blockchain world. So I was wondering if you could tell me a little bit about your thoughts and overview about what the blockchain is going to do to disrupt different industries.
Oh, thank you so much for asking the question. Thanks a lot for having me here. I think that we need to first be clear that the internet that we have today is neither the internet that we're going to have in the future, nor is it the internet we would have designed for what we currently expect it to do. 30 years ago, the internet was created primarily as a communication device, and as a result, it has some fundamental weaknesses. And those weaknesses include it wasn't built for security, it doesn't allow for the identification of the other party that you're communicating with. It has temporal interdeterminacy, which means you don't know specifically the order of communications and the transaction times associated with them. And there are other, and increasingly it's controlled by a relatively small number of very large networks and players. And we are beginning to see the potential unraveling of some of the net neutrality beliefs and expectations that were there when we launched the internet. So these are examples, but the real point is it was designed to be a communication platform. Today, those weaknesses are becoming extremely threatening. Cybersecurity hacks and breakdowns, over concentration and congestion of the infrastructure that we have. These things mean that it's time for us to figure out what the next internet will be for the next 30 years. And if you were to design it today, you would design it with some of these things in mind, cybersecurity and so on. The blockchain technology today is our best hope for addressing some of those fundamental weaknesses in the internet.
Fabulous. I got shivers because I believe it's going to disrupt so much and it helps so much as well. Could you tell me a little bit about how you see the overview about cryptocurrencies, and are they real? Do they count? Can you invest in them?
Well, that's a lot of questions bundled together, Pimo. First and foremost, the underlying blockchain technologies enable the opportunity to create software that has embedded in it additional functionality. And the first application of that was Bitcoin, built on the blockchain technology, which is essentially intended to be a virtual distributed currency or asset. We understand, because we've read so much about it over the last few years, what Bitcoin is attempting to be. But I think what some people are unclear about is that this is all software. So when you ask me the question, is it real? The answer is no, none of it's real. It's all virtual. Right. And software raises certain questions. The first is software is infinitely copyable, and it tends to be subject to technological obsolescence. And so the issue then is when you ask, is it a store of currency, for a specific piece of that software, you have to ask the question, am I sure that this piece of that software is going to be there in the future? Right. And that's the fundamental question when you come to crypto assets and cryptocurrencies. We don't know which are the winners. We don't know which ones will be the ones that we'll rely upon in the future. And so that's very different from traditional fiat currencies. The US dollar, whether we love it or hate it, is the only US dollar. Yes. And gold, as a precious metal, is the only gold. There's also other things, platinum, silver, and so on. But when you get to cryptocurrency, you can infinitely fork and copy them, so you don't know which are the winners. Right. And so that means that as investors, we have to be very thoughtful about investing strategy when we apply it to something like cryptocurrencies and assets.
And recently we've noticed here in our events and panels that there's been a huge jumping of the chasm by people that would not have been interested in the crypto blockchain world before. That started probably the last quarter of last year. And I wondered what you think about that, that all of a sudden, I'm glad and happy about it, but all of a sudden, ordinary people that are not interested, even my building manager, my apartment building manager said to me the other day, "Oh, you're into crypto?" And I'm like, So I'm amazed that this happened so quickly, and I've been sort of following it and supporting these currencies since, the inception, really, in 2008 and 2009. So I'm wondering, why would this happen?
Yes. Well, I think that there's multiple components of that question too. Everyone is an investor. However poor you are, there are assets held somewhere in your name, whether it be by the government, social security assets, whether it be by your company, pension assets, whether it be in self-managed accounts, big or small, that you may have in your name, or you may have your own small investments or large investments. But all of us are investors in some respect, even if we're not the decision makers. Again, 30 years ago, we began a move towards self-management and away from defined benefits to defined contributions, and that led to more and more people beginning to manage their own money. The problem is we limit their choices. So we give them fixed income, we give them public market securities, and not much else. And the reality is those are low returning asset classes. So I think it's understandable that when most people look at the people that are free to invest in anything, and they see the enormous returns that come from being early stage tech investors, private equity investors, real estate investors, I think that there is a feeling that the mass of the people are being left out. And so the promise of crowdfunding, the promise of distributed asset classes and categories, ICOs and cryptocurrencies and assets, is the democratization of investing and the opportunity that represents for everyone to manage how they choose to invest and spend their money. With that, however, comes a responsibility, which is if you take it on yourself to make your own investment decisions and you lose, you are therefore supposedly responsible for the outcomes that you might have generated for yourself and your family. And at that point, government steps in, and most governments say, we want to protect the people from themselves. And so, as well as from other people. And so in the 1920s, following the great crash in America in particular, but around the world, a bunch of regulation was brought in. Accredited investor, general solicitation, unitary banking, Glass-Steagall, all of these things were intended to protect the masses from the sharks, the bad actors and the bad practices, but also to protect people who couldn't really afford to lose everything they have from themselves. We're in the middle of a dialogue in America and in society about the fact that we took away those regulations, we've taken Pandora out of the box, we're allowing people to invest in the ways that you're describing, and the potential negative consequences of that, as well as the positive consequences, have yet to be seen. And we're beginning to see very young people become very wealthy overnight. That's a positive consequence. But without question, we're going to see vast numbers of people lose everything that they have and everything that they spend in the space. Why? Because the failure rate in software-based businesses is very high. And cryptocurrencies and crypto assets are software. So the failure rate of software-based startups, we're going to see that in the crypto asset environment. There's already thousands, soon there'll be 10,000s, and maybe one day hundreds of thousands of crypto assets, and the number that will win will be very small. And that means total loss of your capital in all of the cases where you bet on the wrong coin or the wrong token or the wrong asset.
So you mentioned ICOs, and obviously that's a very hot topic at the moment. I find I was around in the early days of the crowdfunding here. I've been here 8 years, and I definitely don't see the intense excitement and applause that's going on around ICOs that there was for crowdfunding. And I gather that crowdfunding was like the inception of people being able, ordinary people being able to invest in things that they were interested or wanted. So what do you think's happening with this ICO craze?
Well, I think it's a convergence of several factors. One is, it is the belief that we are about to reinvent the internet and that this blockchain technologies and the things that go with them are essentially the next generation wave of a global digital world designed to do what it needs to do, which is not just communicate, but conduct commerce and transact and exchange and store assets and so on and so on. And if that's correct, then I do believe, and I actually do believe, that it's sort of 1995 all over again. And we don't know who's going to be the Google, the Facebook, the Cisco, and so on, of the PayPal of this next time frame. But I suspect that those companies are indeed being seed funded and founded right now. Wow. And so that's a very exciting proposition. The problem is that just like with toys.com, the little sock puppet, or even, pets.com, or even eToys for that matter, there's an awful lot of companies that are being founded today that will not succeed. And so I think the risk is very high. So that's one point. The second point is, as we said, the democratization of investing and the opportunity, and as well as to some extent, a generational shift as more and more people feel more and more confident about managing their money themselves and actually distrust the traditional institutions that would have done that on their behalf in the past. And then another thread of this is more of a mission-based view, which is, I think that there are people that really want the world to be different, and they view the distributed movement as a piece of that, of a way to shift from an industrial era and everything that went with that to more of a digital world, which we call the fifth era, which they actually want and they want to embrace. And so that's all good. The issue is, if you're an investor, or at least if you're going to make these investment decisions, you should be clear in your own head and unbundle your motivations. Right. Are you doing it for financial gain? Are you doing it because you believe in the purpose? Are you doing it for some other reason? And I think people are confused about that because, for example, if you did it for financial means, you wouldn't just want the token, you'd want the equity in the company that is bringing out this token. And I think most ICO investors don't get that point, most by number. I mean, obviously the very sophisticated ICO buyers who are buying the biggest blocks get that, and they are increasing, they are most frequently getting equity positions too. But the masses are just getting tokens. And tokens are software, and software is subject to obsolescence, and most of this software will fail. And the companies that bring out token A don't have to support token A. They can change their mind later and create token B, or token C, or token D. But if you're an investor in token A and you don't have any equity in the company, you'll be left behind as baggage that they no longer want to carry if they shift their focus over time. So as equity-based investors, we want equity in the companies too. And that's creating a dialogue in this time frame because the entrepreneurial founders don't necessarily have to give away their equity because the marketplace is rewarding them for just selling tokens.
And someone was mentioning to me on this theme that because I was concerned about the fact of the sort of almost irrelevancy of the venture capitalists now with people raising ICOs, and someone did say that the angel investors are the ones that probably are more relevant at the moment and know more about what's happening than maybe the VCs, because he mentioned that VCs are buying tokens, and I know one venture capitalist said a lot of them are changing their structures so they can buy tokens, but they're not investing their experience and their knowledge like they used to when they would be on a board with a startup. So how do you think that's going to affect the ecosystem, not having that experience?
So I don't agree with that. Okay. My wife Alison and I were fortunate to meet and be associated with Blockchain Capital Partners almost since inception, and Alison actually chairs their advisory board, and Bart and Brad and Spencer are phenomenally talented venture capitalists, and the value added they bring to the companies they back is much more than the capital. That is a cliche. In entrepreneurialism, in growth companies, it's always true that the value added is at least as important as the capital.
If not more.
If not more. And I think actually, given that this is a globalized world and the distributed movement is trying to serve everyone all at once, navigating through the complexities of operating in a global world, building a business that can support such a large marketplaces, creating the go-to-market partnerships and alliances and other things that is necessary, dealing with regulatory issues on different countries, et cetera, the value added that a really good investor and a venture capitalist investor can bring, I think, is higher than ever. I think there's a handful of blockchain-focused venture capital firms. And the good ones, the BCPs, the Panteras, the digital currency groups, are bringing a lot of additional value added. And there are others. I'm sorry if I failed to mention some. I'm also feeling that the general purpose venture capital firms, the very best, the Sequoias, the Drapers, the Union Square Ventures, who are getting into this game, the Andreessens, are also great. Now, the issue is that we're seeing every Tom, Dick, and Harry create a blockchain venture capital firm. And I see no reason to believe that they would succeed any more than, the other 1,200 venture capitalists we have in California. We have a handful, less than 100, that create superior returns, and we have maybe 1,000 that destroy value. Now, you asked the question about angels, and I think angels can bring a lot of value, but I don't think that's understood yet, actually, in this new blockchain community. They don't bring their businesses to the traditional angels today. And I think that they will over time, because they'll get a better sense of what the value added is. But if I'm a Band of Angels member of 12 years, I go to the band meetings, we don't see too many blockchain businesses. Keiretsu, the world's biggest angel group, which I help lead in terms of leading the funds there, we don't see too many blockchain companies.
Interesting. Wow.
Yeah.
Well, thank you so much, Matthew. You've totally educated.
There's one question you didn't ask me, Pima. How do you invest in cryptocurrency?
Yes.
Do you want to ask that?
Yes, please.
I think you do it very thoughtfully and carefully.
Yes.
And what I mean by that is, just in the same way as I don't think I or you or too many people watching this are qualified to be foreign exchange traders in the old way, and doing sort of market-based, algorithmic, foreign exchange, hedge fund strategies, etc. So too in cryptocurrencies, whilst you can buy them easily, I think that that's shifting fast in the sense that sophisticated products are being created. And so I've been spending a lot of time with Bitwise and Hunter and his team. And I do believe there'll be an ETF and a basket of cryptocurrencies. Bitwise already has one. And I'm on the advisory board of BitBull. And I think Joe DiPasquale and Sarah, yes, you know them. And I think that's very smart, to create a fund of funds where you invest money in the best cryptocurrency hedge funds, especially since their minimums are so high. Most people can't afford $250,000 investments. Whereas if you give BitBull $100,000, it's going to be spread out across many of the best hedge funds. So I'm seeing increasingly very clever products being generated in this space.
Right.
And I also have a Coinbase account and a MyEther wallet, and have tokens of various types. But I'm gravitating towards sophisticated managers and investing in them and letting them then invest in cryptocurrencies.
Fantastic. Well, thank you so much. I feel totally educated, and it's always a pleasure to talk to you. Thank you.
Thank you very much, Pima.
Okay.
Yeah.